All right. Welcome to another Forex Bootcamp training. Again, my name is Wellness Matera, your Forex trainer, and I'm going to share with you a strategy that I believe would help in your pursuit of profits, right? It's all about profits, all about making some money, uh, trading the Forex market. Now, if you're a beginner, um, pretty much take a lot of notes. We're going to look at GBP USD. And I'm share with you the strategy that I've been using that's helping me become successful and profitable in the markets. Again, there's no guarantee of um, profits. There's no guarantee of you making any money. The only guarantee is that if you stop learning, you'll make no money. That's the only guarantee I can make. All right, so let's jump into the charts. Let's look at what's going on. I'm looking at GBP USD, which is a pair that I've been trading. One of my favorite pairs. Love this pair. British pound versus the US dollar. And this is pretty much what's been going on. If we look at the weekly, right? If we look at the weekly, we could take a look. And again, the platform that I'm using to actually chart everything is TradingView. TradingView is a platform. You could find TradingView if you don't already have an account. You could try and get a free account with TradingView on my website at wellsmaterial.com. Okay, there's a link on there. You can create a free account, and this is what you'll be looking at once you go into the charts area to actually help you plan out a successful trade. Okay, with everything, you have to have a trading plan in place because you don't want to jump into this shark-infested waters without a trading plan. Because, tell you the truth, um, if you don't know what you're doing, you're going to lose a lot of money. Okay, so be very, very mindful that you don't want to trade money that you use for your daily bills. You want to trade money that you can expect to lose. You can open up a trading account with as low as $10. With another platform that I recommend on my website, with as low as $10, you can go live and trade that $10. Try to grow that $10, so that way you can go live and try to understand exactly how the market will, how you can approach the market with a strategy. So I'm going to share with you a strategy today that I think is going to be very, very effective. Been testing it out last week, and it's been pretty much giving me some good vibes. So let's dive into the chart. This is a weekly chart that we're looking at right now. Last week, the market was down based on this chart right here. Okay. Now, you guys already know that I do a top-down analysis, but I'm going to pull up some notes, and we're going to take a look at this particular chart. And based on the notes, we're going to start on the daily chart first. Let's start with the daily chart first. Let me pull up my notes real quick. Now, you guys could screenshot this, take a picture on your cell phone, or rewind the video and take a look at what I'm talking about here. So let's go ahead and go to my notes. The great thing about TradingView, you can create notes. So this is the notes that I'm going to be using to help me plot out a strategy in the market going forward. Okay. So it works with 3 time frames. So the first thing we're going to be looking at is a daily time frame. Okay. So we're on the daily time frame now. So it's that D that you see on the top left here. So we're looking at the daily time frame, and what we're looking for is to chart our support and resistance levels, and we only need to find 2. So we're looking for the high and the low of this market on the daily time frame. So I have an indicator. So let's take a look at this indicator real quick. That plots out my support and resistance levels. So lo and behold, it's called support and resistance, right? All right, so let's go ahead and click on this, and it's by Lonesome the. So you want to get this indicator right here and make it, and you start it by making your favorites, right? So what this does, it plots out my support and resistance for what I'm looking for. So I'm looking for the high and the low based on this support and resistance level. So we're going to pretty much take our horizontal line, we're going to put a line above the resistance, and we're going to make that black. And we're going to take our support, make that black as well. Okay, so this is the high and this is the low of the market. Now, we're going to go ahead and close out support and resistance. So in our daily, these are the two lines that we need to plot out. All right, now, next step. All right, based on my notes, go to the 2-hour time frame and add your EMAs. So you want a 20 EMA and a 50 EMA. So now we're going to go down to the 2-hour. So the 2-hour, start it and put 2 hours. Now in the 2-hour, we're going to put 2 EMAs. And again, you go to your indicators and you're going to go ahead and put some moving averages 2 times. Click on moving averages 2 times. Make sure it's one of your favorites. Okay, so you got your EMA. You're going to open it up, and this is the settings you want to put. You want to make this 20. In the style, you want to make it, I usually make it black. Okay. And the thickness is this one right here. And you can click OK. So that black line is a 20 EMA moving average, right? Now we're going to go to the second one. I'm going to plot this out and make this one 50. 50. The style, I'm going to make this one red. Okay. And make it a little thicker. All right, so this is what we're looking at. We got the black line being the 50 moving average, the 20 EMA. We got the red line being the 50 EMA. Okay. All right, so this is what we're looking at. Now, pull up my notes again. Okay, so we did that. At the 2-hour time frame, we added 2 EMAs, 20 and 50. And we're looking to look for a crossover. So whenever the 20 EMA is below the 50 EMA, we look for sells. So the black line is the 20 EMA. It crosses over the red line, which is the 50 EMA. So whenever you see the black line crosses over the red line, which is a 50 EMA, you're going to look for sells. This is telling that the whole trend is on the downward trend. So we're going to look for sells throughout this whole time period. Okay. Now, if the 20 EMA is above the 50 EMA, like when it crossed over, became higher over here, it was crossing over the red line, which is a 50 EMA, you look for buys, right? So that's why it went up. So we're looking for sells because it crossed below the 50 EMA, and we're looking for sells throughout this whole time. Okay. Now you're going to drop down to the 30-minute, and you're going to identify your supply and demand zones. Okay. So I'm going to drop down to the 30-minute and identify the supply and demand zones. Okay. So now we're going to go down to the 30-minute, start it, and we're going to look for supply and demand. Now, there's another indicator that plots out your supply and demands. So let's go ahead and click on that. Supply and demand by Lex Algo. Okay. And you could click on this one, supply and demand visible range, Lex Algo. Okay. And this tells you where supply and demand is. So you have the top zone and the bottom zone, and pretty much whenever you see this, okay, you want to go ahead and place your trades towards a downward trend, right? But the great thing about this is usually when it hits supply and demand, or the top and the bottom, it bounces off and tries to go towards the higher spectrum. But it may even break through, okay, the low, may even break through this whole area and go lower, okay? So you want to anticipate that. So what we're looking for though is the crossover, right? What happened was the 20 EMA crossed over the 50 EMA. So we're looking for sells throughout this whole area. Okay. So now we're going to look for our fair value gaps. Now you can drop down, look for fair value gaps in the 1 minute. Okay. Look for fair value gaps, FVG, in the 1 minute time frame. When the market hits your fair value gap, okay, you're going to place your order. So this is, you're dropping down to the 1 minute. And we're looking for a fair value gap. Okay. Okay. Now there is also another indicator that tells you what your fair value gaps are. Okay. But make sure you plot out supply and demand. So let me go ahead and do this real quick. So I can take it off. You're going to make a huge box and carve out supply and demand. That's usually done on a 30-minute because we got to make sure it's on a 30-minute. Right? Not on the 1 minute, the 30-minute. Take this off. Click on your box. Now you can find the box over here as well. In this area, you just click on your rectangle box and you can lock it up. That way you can make two boxes here. Okay, and these are your targets. Okay. You're gonna place your orders based on supply and demand. Okay. Um, so pretty much you're gonna be bouncing up and down because if this is supply, this is demand, you'll be bouncing up and down. So right now we're down here, but we're looking for sells. So now we're gonna go down to the 1 minute. It's bigger. Okay. So let's say you saw this crossover right here. Okay. And you know when black crosses over the red, you're looking for sells, right? But where is our fair value gap during that time? Let's take a look. So we're going to plot out a fair value gap. So there's an indicator by Lex, I'll go again, called the fair value gap, FVG sessions. You're going to click on there. And put it on your chart. Now, it's not a live chart, so it may not show. Okay, so yeah, it has to be a live. The market is closed, so it's not live, so it's not going to give you the fair value gaps. But we could plot it on our own, okay, and take a look to see where the fair value gaps are based on this chart. So what I'm going to do is plot it out for you guys and show you where they are. Okay, let's see. There's one right here. Usually the previous candle. You stretch it out. Because with a fair value gap, the market has to come back and retrace into the fair value gap to continue its journey to go down lower. Okay. All right. And there is another one right here. Right. Typically, that would be a fair value gap. It's between two candles, and there's a gap between the two. Okay, so as you can see, the market tried to get up there. Sometimes automatically get up there on its own. So you got to be prepared for that as well. Okay. But we're going to try this fair value gap right here. So what I'm going to do is do a replay real quick. Okay. So we're looking at this market. And what are we waiting for? We're waiting for the market to give us our movements here. We're looking for the market to, this black line to cross over the red line. And then we get prepared to place a trade based on the market going back into our fair value gap, going down in a downtrend. So let's push play. Let me show you what the market looks like or does. So you got to be patient, right? You got to make sure you're patient enough to wait for that action to happen. Okay. Okay, so we can pause it right here. Okay, so the black line cross over the red line. So this is your 20 EMA, and that's your 50, right? Now, you would already known that the market is shifting based on it not making any higher highs. Okay, so you already know in order for this market to continue in its uptrend, it's got to create higher highs. So they didn't do that. It started to go left, right? Consolidate left. Consolidate right, I should say. This is your consolidation. Then all of a sudden, it started to make lower lows. Okay, so lower lows is something like this. This is a lower low. This low is lower than this low, then a lower high, and lower low. So this is where you know that the market is shifting because it's actually going below this particular area here. Okay, once it breaks this structure line right here, you're looking at lower lows. Okay, so you could put a line on there and you say to yourself, okay, the market didn't make any more higher highs and it broke this low here. Okay, so you can anticipate the market going in the opposite direction. Okay, so where would you have to place your trade? Well, right over here. You would place your trade right over here. Okay, place your stop level above this candle here, and you stretch this out for about a 1 to 3 or 1 to 2.5, either or. So let's do a 1 to 2.5. Okay, a 1 to 2.5, and you would have a winning trade. Okay, because everything came into play, right? And that's a strategy that I wanted to share with you guys today. Okay, so let's do a review real quick. We're going to start at the daily. Okay, and we're going to take out my notes. I want you guys to practice this. And back test it for yourself. It's my trading plan. There it is. For the first thing, again, it works in 3 time frames. Your daily time frame, you look for your support and resistance levels. Okay. You only need your high and your low. Your 2 hour time frame, you're gonna add your two EMAs, your 20 and 50. You're gonna look for a crossover. When you see a crossover, you're either gonna be looking for sells or you're gonna be looking for buys. When the 20 EMA crosses over the 50, you're looking for sells. When the 20 EMA is above the 50, you're looking for buys. Then you're gonna drop down to the 30-minute time frame. You're gonna identify supply and demand levels. You're gonna look for a fair value gap in the 1 minute. And once the trade goes right into your fair value gap, you're gonna place your order, whether it's a sell or a buy. And pretty much you set your ratios for a 1 to 2.5 or 1 to 3. So it's all depending on how much you want to make on that trade. It also depends on your lot size. I recommend you try 0.01 lot size first, just to get a handle how this whole system works and this whole trading plan works. And again, you have all your indicators here. You have your support and resistance indicator. Okay. And you have your horizontal line over here. You know, lock it up. Okay, you're gonna put your high and your low. Okay, and then you can take off support and resistance. We've already plotted it out. Then you're gonna drop down to the 2 hour. And in the 2 hour, what are we looking for? My notes again. And this helps you, pretty much plan out your trade and hunt for an opportunity to make a trade based on a strategy, right? You're not going to be guessing because you want all these things to pan out. And once it pans out, you take your trade accordingly. This is like your little cheat sheet. So 2 hour, you got your EMAs, your 20 and your 50. So again, we're going to put moving average exponential. We're going to click on that twice. We go to the settings. We make it this one black, the input 20. Click OK. Okay, we're going to make it a little thicker so we can see it. Click on black. Click on a little thickness. All right. And then we're going to click on this one. Make this one red. Thickness and 50. All right. And again, you're looking for crossovers, right? Whenever you see a crossover, you're looking for sales going down because it's a downward trend. All right. So you definitely put your arrow and say to yourself, okay, this is a downward trend. Right? All right. Now we're looking for crossovers. We know we actually see some crossovers and we're looking for down trades. So now we go to the 30-minute. Okay, in the 30-minute, we're going to put our supply and demand levels because we don't know, we want to know where the market's going to go up and down from. So pretty much it's going to bounce from support to demand, demand to support. And you only place your trades usually during those two time frames. That way you have an opportunity to get a nice trend going up or a nice trend going down. And we're going to quickly put support and resistance. I mean, supply and demand. Okay, we're going to plot that out. Here they are. And you're going to take your rectangular box, you're going to plot it out. So in essence, you're going to be a supply and demand trader. You're going to be trading during this supply and demand area. So if it hits here, it may bounce up and go upward, or it may break away and retest the bottom, retest, right? It may break away, come down, retest it, and continue its journey. Okay. Or it may reverse. And bounce off this area and go back up to this area. And of course, it's not gonna go straight up like that, but it'll do one of these numbers here. All right. All right, so we plot out these two. Now we're gonna take off support, supply and demand. We know where they are now. Okay, and then we're gonna go to our 1 minute time frame and look for some fair value gaps. Gaps between two candles. And see exactly where we would place our trade, because we gotta wait for it to come back to our fair value gap in order to take the trade. Okay, and we already identify that this area here was a fair value gap between this candle, because the market came back and retouched this area. You would place your trade here. If you miss this particular area, you wait for another area to be tested, right? Here's another fair value gap between this candle and this candle. As you can see, the market came back. This candle came back and came right back into the fair value gap, because there's a gap between the end of this particular candle, this wick, and the beginning of this wick. There's a gap. So the market came back and touched the gap and came back down. Okay, so you had two opportunities to enter this trade. And again, 1 to 2 or 1 to 3, and you would have been in profit for those two trades. So you got two opportunities to get into this market right here. Okay, so this one would have been, if you entered here, you set your stop loss right above this candle, and you do a 1 to 2.5, which is about right there. Okay, so you have two opportunities here to make some good profits based on your lot size. And yeah, this is a strategy that I've been working on, been back testing. It's been working like a charm. And just remember that the notes are there for your guide, for you to, as a guidance. It's like a roadmap. You get from point A to point B. Okay, no guesswork. You just follow the steps and you implement what you see in the notes. Hopefully, this works for you. Comment if you test this out. Let me know how it worked out for you. Um, Let me know if it's something that you practice. Yeah, just comment below. I just learned about this strategy, and I've been implementing this strategy. It's been working like a charm, and I'm actually, testing this strategy on a funded account. So I'm actually in a funded account, trying to pass the funded account and see if I can get funded with this strategy. And you just do this between different trade sessions. Yeah, GBP USD, 3 o'clock in the morning is when London opens. You could test it out during that session there. But yeah, hopefully you guys enjoyed this particular tutorial. Hopefully you implement this strategy. I want to thank you so much for watching, and you guys have a wonderful trading week. Appreciate you. Thanks for subscribing. Don't forget to hit the subscribe button, hit the bell button when you'll get notifications of future videos, and share this with your friends. Let's increase the subscription by you sharing this with your friends. Thank you so much. You guys have a great one. See you next week.